So let's go back to our diagram of the flow of money and see how it has been affected by the abandonment of the gold standard. And for that, let's see how the rich, the owners of the means of production, spend their money. First, they spend it for their lifestyle. They buy their homes, their cars, their travels, their food, and so on. They also spend to run their businesses. They buy supplies, they buy machines and build new factories. And the rest, they will seek to convert it into assets that keep or even increase their value through time. Since the money is no more convertible into gold, it is now very much affected by inflation, and no one wants to keep money if it loses its value through time. So the rich will invest their money in different ways. They will buy properties, land, gold, art pieces, hoping they will keep or increase in value. And they can also buy means of production, factories, businesses. But the most convenient way is to buy shares of the business and not get involved in the running of the business. Just get a share of the profits. We can represent this by splitting the flow of money between the rich in two, because there are two markets. There is the markets of goods and services, where the rich buy real goods and services, and the financial market, where the rich sell and exchange their means of production, the share market and other derivatives and financial products. And it also includes the bond market, where the rich lend each other money. The financial transactions in the financial market can be enormous, but they are not creating wealth. It is just rich people selling each other assets. Like a little bit at the casino, even though there is a lot of money that can be exchanged between the players, at the end of the day, it has not produced anything, and it is just a transfer of assets between the players. The financial market can be enormous, but it doesn't create any wealth, and almost none of this money is returning to the consumers as wages. It is a market for the rich, where those who need capitals can sell some assets. In this market, the richest buy the poorest, and the rich compete and eliminate each other, trying to make more money with their money. But this financial market can still have an effect on the other markets. For example, in 2008, when some big financial institutions went bankrupt because they have taken too many risks and being too much exposed, trying to make more money with their money, when you have big players like banks going bankrupt, it can create a cascade of bankruptcies that can crash the whole financial system. But we won't focus on the financial market in this presentation. We'll pay more attention on another way the rich invest their money. It's by lending it to the banks or the government. If you have a lot of money, the safest way to invest it and make money with your money is to lend it with interest to people, to corporations or institutions that you are sure will pay you back. When you invest your money in the stock market or other financial products, it can be more profitable, but it also can be more risky because you're never sure of the life and the performance of a business. To lend to someone who has already a lot of assets, you are almost guaranteed to have your money back. Unlike people or corporations, the government will always be there and has a lot of assets. So when the government needs money, it prints bonds, and the safe investors are rushing for them. For normally a smaller interest, safe investors can also lend money to a bank by depositing it to a bank. When you put your money into a bank, you actually lend it to the bank, and you will receive a small interest for your deposit. And what does a bank do with your money? The bank will keep a small part in cash as reserve, and the rest, it will make money with your money by investing it on the financial market, mostly by lending it safely by buying bonds, highly rated bonds, government bonds, treasury bonds. Those who need money compete with each other on the financial market to attract the money that the rich would like to convert into assets. A corporation can sell a part of its business as shares, or it can borrow money with interest by issuing bonds, which are IOUs, and those bonds can be sold on the financial market. Institutions like governments have no shares to sell, so they issue bonds, and they have to compete by offering the best interest rate to attract the money lenders. So a very important question to ask is, why does the government have to find money on the financial market, issue bonds at a competitive interest rate, when it could create money out of thin air from the central bank to finance itself? The governments have done it in the past, but cannot do that anymore. Why? The reason is that the governments, progressively and all over the world, have given away their power to create money to privately owned central banks. Not only that, they have also passed laws that they will not finance themselves through the creation of money, but through the financial market. Who would do that? Give away your power to finance yourself. This shows you the extent of the power of the moneylenders, who are able to dictate the laws of the governments and the monarchs and take away their financial powers to create their own money. Not only the central banks of almost all the countries all over the world are privately owned, but the owners are also kept secret, highly secret. That's why people speak often of a cabal that has taken control or financial control of all the planet. And that gives a lot of credibility to this conspiracy that we have mentioned before. So the bankers are willing to create money to finance consumers, the loans of the consumers, but they are not willing to create money to finance the government. Why? Why would they do that? The answer is that if we let the government finance itself, then it can abuse its power and create too much money that creates inflation and even an hyperinflation that will destroy the money. For the moneylenders, the politicians and the government cannot be trusted. And to prevent the governments from abusing their power to create money, the moneylenders have taken this power away from them, and now the governments have to beg them for money and to beg them with high interest rates on their bonds if they want to borrow their money. But there is another very good reason why it is so, and this reason is never mentioned. As we have seen, the problem for the rich is to invest the money they didn't spend. To find good investments is not that easy. Why? Because the market is already saturated. If the purchasing power of the consumers doesn't increase much, or is flat, or even decreases, why invest your money to produce more if those who will buy your product don't have the extra money to spend? For example, why invest building homes for the homeless if they don't have the money to pay the rent? New markets able to attract the money of the consumers are pretty rare, and when they arise, you have a rush of investors, creating a bubble and making the whole investment less profitable and also risky. So productive investments are saturated, lending to consumers don't think about it. So what's left is to lend to the government, which is a reliable, full of asset borrower. But you can only do that if you remove the government's power to finance itself. To maintain the same level of economic activity, the government will not create money, but will have to borrow from the rich, to borrow the money they haven't spent back into the circuit. They will have to borrow it from the rich and spend it in form of social aid or wages. And that will compensate for the lack of purchasing power of the consumers. And here we have the pump we were looking for. The government is the pump whose borrowing from the rich makes possible the money to circulate from the rich who accumulate it back to the consumers. In that way, the money can continue to circulate in a loop. We can simplify the diagram by noticing that the function of collecting deposits is actually a service that can be part of the goods and services that are already offered. And this part of the bank can be separated from the place where money is created and destroyed and can be added to the pile of means of production of goods and services. At this stage, one can notice that the consumers, who also work for the rich and earn money, can invest their money on the financial market, can have some savings and put them in the bank and earn the interest, and can buy treasury bonds. So they are not represented on the diagram. Actually, they are represented. You just need to consider that they change places. For example, if someone makes money with his money by investing it, let's say that he makes 10% of his total income through investment, then we'll consider that this person spent 10% of the time on the side of the rich, those who make money with their money, and 90% of the time on the side of the consumers, those who work for the rich. In this way, the diagram represents everyone. Let's see the simplified version of the diagram by summing up the flows of money. Let's consider the foreign trade is balanced. Let's consider for the moment that there is no increase or decrease in the money supply. Because the rich are running profitable businesses globally, we can be sure that their total income is greater than their total expenditure. To ensure the same level of purchasing power of the consumers and the same level of economic activity, the government will have to go further into debt and to borrow what the rich haven't spent to return it back to the consumers as social aid or wages. This is very important to understand, and you won't find this information in the official courses given at universities. The problem of the government going into debt is the systemic problem, is a problem created by the system. It is the free market, the problem, the free market that allows the enrichment of the rich at the expense of the rest of the population. A system which is not able to keep a balanced state without having the government going further into debt. So on the diagram, it's very clear. The rich win on both sides. Not only they run profitable businesses by making sure they sell their products more than they cost, but on top of that, they lend the money they have made to the government who needs it to compensate for the lack of the purchasing power of the consumers, and they will lend this money to the government with interest. So it's a double win. All the financial gurus will tell you the way to get rich is to save money. So you make first money, hopefully by making other people work for you, having a profitable business. But then this money, you invest it. If you want to take risk at the beginning and get rich quicker, you invest it in means of productions on the share market. But once you reach enough capital and you want to invest, or you want to invest safely, you lend this money to safe borrowers. And once you have enough money, you can not only live from the interest, but your capital continues to grow. So you make even more money with your money, having other people work for you. and you have become a moneylender and a slave master. So that's the model all those financial gurus are giving us, the model we are brainwashed with. The model for success is to become a slave master by having other people work for you while you enjoy making money with your money. Making money with your money would not be so bad if it was not at the expense of others. There is an idea that has been made popular by the rich to justify paying less taxes that says that when the rich get richer, the money trickles down and everybody benefits. But it is a lie. I guess they refer to the time long gone where the kings enriched themselves through newfound gold or plunder, and their spending allowed this new wealth to enter the economy. But at the time, they were not making money with their money. They were actually creating money and spending it. And today it's different. Money is created through debt, and the rich make most of their money by lending it. So when the rich enrich themselves, more debts are created. That means others have to go into debt. So the debts are always increasing, and the system is designed to collapse under the weight of the debts. And we will see that it creates crisis, hyperinflation, destruction, and even wars. The principle is simple. Trade can only last if the exchanges are balanced. If some go broke in the process, then to continue they will have to buy on credit. As the system is designed, the people cannot afford what they produce. Those who own the means of production decide both the prices of the goods and the level of the wages, and they make sure the trade is profitable so they can save money and enrich themselves. That means that the trade between the consumers and the owners of the means of production is not balanced, and the consumers will have to buy on credit or to go into debt. So the system is creating more and more debts, unrepayable debts by design. And the same principle applies for the foreign trade. Normally, the trade between two countries is always balanced. If one country exports more than import, its currency becomes stronger and the other one weaker comparatively. That decreases the export and increases the import until it's balanced. But it is not always the case. Like, for example, in Europe, where all the countries share the same currency. If you have a very productive country producing a lot, like Germany, sharing the same currency and in a free trade agreement with a much less productive country like Greece, the Greeks cannot protect themselves against the flow of products coming from Germany, and they will have to pay by selling their assets. And that will be aggravated by Germany lending to the Greeks so they can continue trading. And the Greeks will go further into debt and be depleted from their assets even more. Same between the rich productive countries and Africa. The rich productive countries lend money to Africa so that they can sell them their products. And they deplete the Africans from their assets and resources even more. The solution would be to develop the means of production of the African countries so they can balance their trade without being depleted. The trade between China and the United States is not balanced. China exporting much more than importing from the United States. It is made possible by China having the policy to maintain the same or about the same exchange rate with the US dollar. When Chinese companies transfer their dollars into Chinese currency, the Chinese government ends up with an excess of US dollars. But this excess of dollars finds its way back to the United States by China buying US Treasury bonds. China doesn't want to reevaluate its currency, but prefers to lend to the United States to continue to sell them its products. We have the same pattern of the owners of the means of production lending more and more money to the consumers to keep on trading. We have seen that since the end of the gold standard, all the money that has been created by creating debt. That means that any single unit of currency that is created, any dollar, any euro, any yen that is in your pocket, there is either someone, a business, or the government that owes this dollar, this euro, or this yen to a moneylender. I repeat because this is very important to understand. Any money you or anybody else earns, it's because either someone, a business, or the government has made a loan to a moneylender and needs to pay it back with interest. I can say it differently. If everybody pays back their loans, all their loans, to the moneylenders, there is no more money in the system. All the money will disappear. So to enrich yourself, even by $1, someone else has to go into debt and to pay this dollar back with interest to a moneylender. It is so important, so I say it again in another way. Every single dollar you keep in your pocket for a certain period of time, during this time, someone, somewhere, has borrowed this dollar from a moneylender and is paying interest on this dollar while you keep it. So you are impoverishing someone and making a moneylender richer. One last time, every single dollar that's circulating, that you can see, that is somewhere on a bank account or anywhere that exists in circulation, someone is paying interest on it as it circulates. The more money that is circulating, the more interest are being paid to moneylenders. The moneylenders are getting richer at the expense of everybody else. I mean, at the expense of anybody who needs money to do their shopping. But the problem of the debt is much bigger than that. If the money is created through debt, it doesn't mean that all the debt come from the creation of money. We have represented so far an equivalent amount of money and debt, representing the creation of money through debt. But the amount of debt in the system is much bigger than the amount of money in circulation. All the money that has been saved by the rich is recycled into the system as debt. So not only a dollar is created through debt, but this dollar, when it circulates through the loop, can be lent to the government, to businesses or individuals several times over. So the amount of debt in the system could be many times over the money supply. So now consider the payment of the interest on these debts that is going from the people and the government to the rich. It's enormous. The payment of the interest is part of the flow of money going from the people to the rich or from the government to the rich, but it is not creating any wages, unlike when you buy other goods and services. And this payment of interest is independent from the fact that businesses have to be profitable. So the payment of the interest contributes directly to increase the gap between the money going to the rich and coming back to the people, to the consumers. So the whole thing is a big racket. The moneylenders don't contribute to the community through their ideas or their work. They are like parasites who feed on their host until it dies. And we understand now the wisdom of the ancient who were forbidding usury, lending with interest. And we understand why it's forbidden by many religions.